Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, after the Reserve Bank of Australia announcement yesterday at 2:30, the Australian dollar advanced from 69.70 to a high of 70.47, as you can see here, and was contained by the resistance of 70.55. With the market slipping back, it is now assessed that further tests to the downside should come through while the level of 70.55 holds. Although the market is showing somewhat at least another challenge to the upside in an intraday view. The Reserve Bank of Australia kept its cash rate at a record low of 1.5% for the 33rd month in a row, leaving half of the economists community, that is, bruised of its reputation, after many had viewed the RBA would ease rates by 25 basis points. Of the 26 economists polled by Bloomberg, 14 expected the RBA would cut the cash rate by 25 basis points to a record low of 125. But this didn't happen, and the RBA maintained its rate of 1.5%. If the market does reject this level again around 70.55, then we should be looking down towards the support, which is where the bull camp is, and previously tested 3 days ago at 69.4060, with the recent challenge of 61 being the low. Well, overnight we've got a long-legged doji, and the market is a little bit puzzled in direction as we continue to see the US dollar nudge slightly higher. The euro at this stage is lacking momentum. What is concerning is the fact is that while this pattern holds, we could easily see a move towards the target of 110.7085, which is what's still on my forecast, and any advances should fall towards 112.15 or above the cap, and also rejection at 112.55 to 65. Dollar yen is weaker, and as you can see, has plummeted lower since crushing through 110.70 support. Still to come this week, though, on Friday, is the US inflation report. And after the Federal Reserve last week cited to keep interest rates on hold for an extended period, although President Trump had cited low inflation in his call for the Fed to cut interest rates. However, we do have the Fed Chairman Jerome Powell to speak later on Thursday at 10:30 p.m. in Sydney time. The market is also concerned from Sunday's Twitter that Trump warned that he would lift tariffs by this Friday from 10%, which is where it is at the moment, to 25 on 200 billion worth of goods. And then following on from this, Trump also said he would impose 25% tariffs on an additional 325 billion of Chinese goods shortly. This has caused some concern. The market is turning to safe haven demand. As you can see from the break to the downside, the market's still objective is at 109.45 to 55 and reassess from there. We are getting oversold, and the ADX is still trending. Resistance seen at 110.55. Well, 3 inside trading days from this engulfing candle does suggest we could see a further test to the downside. Now, I do believe we are looking maybe towards the region of 129.65, but I don't have a strong view as such because the indicators aren't fully supporting this, but the candles could see a move to the downside because of this engulfing pattern. Let's see if the market does challenge the downside with the resistance seen at this stage at 131.7080. Further risk to the upside is likely because there is further concerns to safe haven demand. First of all, the tension with the US and China trade wars, and also renewed concerns on Iran after Trump's administration deployed carrier strike group and bombers to the Middle East in response to troubling indication and warnings from Iran, and to show the United States will retaliate with unrelating force, as they put it. So there is further concerns from there. If so, a break of 88 would give further moves towards 1,300 with an objective of 1,324. Support this stage seen at 79 to 81. Wrapping up with oil, the market has slightly shied away from the top side after its recent bullish outside range day. Still waiting confirmation of that bull signal. The market has dropped back slightly overnight. I do expect to see any now test towards $60 a barrel. Should find again support and a rejection from there. The immediate target is around 62.80 and then above there up to 64, 65, 85. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new day.